Alright, so there's lots and lots of talk about why gold's moving up higher. There's of course the fundamentals. We can't disregard those because gold is going to be sought after as a safe haven. Fundamentally speaking, when we have a crisis anywhere in the world, gold's probably going to get bought as a safe haven, right? So there's the fundamental argument, and then you've got your sentimental argument. So this is what we specialise in the QuasiDB service. We look at the sentiment over time. So it's the key thing to note is what's happening over time. So this is the Middle East crisis where Hamas, they invaded southern Israel and their civilians were killed. And then we had that repercussion from Israel, and it's not a political video, but this is the scenario that it developed and unfolded in the Middle East. So we had a big gap here on the 9th. This is the invasion, okay? And of course it took everyone by surprise. Now however, prior to this risk event is that the herd were long, but they've started reducing their longs. Right, so what I'm going to do, it's going to take maybe a minute or so, but what we want to do is just watch the price action and then look at the sentiment. Okay, so they sold it. This is the pretty scary risk event that we had, admittedly. So they were selling into the risk event. Okay, sold it again. Another time. Went sideways. They sold it heavily. Okay, that's selling there. Push. They went long. Down. They sold. Okay, went long, so we came down a bit, went sideways, sold, sold, sideways, sold. And each time it does, it pumps higher. So in a way, it's really invaluable, these indicators. And secondly, for the big fish, the banks and the institutions, the market makers, the guys who can influence the price, they're happy about this situation because they're probably going to want gold much higher in order to sell, and also they're going to take out liquidity in the process. These are the retail stops, so you could argue these are like magnets for price. So all that liquidity, these blue lines are old stop loss clusters. There's one here, it just had to probe that one. That's cruel, isn't it? Wow. That one there, that had a big reaction on that stop loss cluster, and more stops, more stops, more stops. It keeps going up higher and higher to grind higher. Now of note, technically speaking, on a weekly chart we have some supply. So if you were a market maker and you could influence price and you could push price higher or lower to where you wanted it to go, a weekly supply isn't a bad place to sell. And likewise, a weekly demand is a good place to buy. So this might come back into play. I'm not saying that we're ever going to get back down here anytime soon, but there's your next demand, right? So we come up to supply, chop around, good sell opportunity, and it's going to be a buy opportunity. I'm not saying we're going to get down there, but that's the next weekly supply demand. Sorry. Okay. So really, just not really has to be like a very long video, but what is of note, you might want to just pay attention to the current positions on the order book. And prior to the Middle East crisis, we had an influx of sellers, which we saw, right, that we're interested in that big blue node, and there's the retail guys selling as we went into this risk event. And so let's go forward through time. So there's one there. If we go back slightly, so lots of sellers. Alright, we're looking at the loss sellers. Okay, forward through time, and then forward. Oh, that's a lot of moves there. That was crazy. Oh, okay, and then forward through time. So it should be acting as a support. See what we're interested in here. Blue volume sticking out. Oops. See, it's now acting as a support. You see, it's pushing its higher. They're trying to sell as we're going higher, and this will be interesting here. This is the trap, and we took out that stop loss cluster. Did we? We came close, but that was the really cruel one. It was really, really cruel, awful, really. And so there's one there. They really tried to sell very heavily here, and what happened? Right, so lots of talk about fundamentals pushing price, but you could probably argue really sentiment as well. So it's a combination of the two. Here we go. It's that awful move where they took the stops out, and yeah, you know, we just probed that liquidity for the bounce. Oh, it's horrible, isn't it? And yeah, see, okay, admittedly they bought there. Here, see if they actually held on to their profits. Now they see how they reduced their profits then. So the, you know, the profit buyers coming up higher, they're really not sure, so they reduced their longs, and that reduction of longs is bullish, and they start to sell it again. And up we come, and here's where we are now. So we can move that across so we can see that a bit better. And then that's it really. So I think we're probably inevitably probably gonna have to get the stop loss cluster above. And if you were short, be aware that there's some stops at 20, 30. All right. Potentially might just want to go and just harass those guys, and then potentially we can fall, but we are looking at a 2080, 2075. If we go above that, it's going to break this weekly chart, and then we could go a bit parabolic. Alright, so but from a sentimental view, a technical view, I think we're probably going to get the stop loss cluster. We're probably possibly going to get those last stops, and it's going to be a big punishment for the bears basically. So just to summarize, we've got the fundamental driver for the move, we've also got the sentimental driver for the move, and you can see how strongly they sold, and it could just be wanting to take liquidity out of the casino, and perhaps there's too many retail traders trading gold and it's skewing things, so perhaps they want to get punished. Perhaps the banks and institutions, they want to punish the retail guys just to get them out, because they could be skewing the price action, and it's probably skewing the bank forecasts and their analysis. So this could be a reason for this to come up, is to punish the herd, because whenever they do something, it tends to skew the market a little bit. And I know they're only a small tiny percentage of the total volume, but you know, there has to be someone to take the other side of that trade. Okay, and that's the thing. If you've got like a 1 million lot trade on something, or 1 million retail traders doing one particular thing, it's quite a lot of capital floating about in the market. So it's possibly a punishment, it's possibly sentimental, and it's also possibly fundamental as well, and it's also possibly just a punishment for the herd. You know, that's probably quite likely. So a combination of a few factors here, but note that on the technicals we do have some supply, but you'd want to be really careful above 2080 or 2075. So just a quick plug for the fxssi.com/plans is that we have a quasi-DB code, so put in that and you get a discount for the FX SSI indicators, and you can get visibility of the order book, the ratios, and also before I wrap up the video, you want to be looking at the MVP as well. So you want to come to the derivatives, that's fine. Now we want to add that MVP, and that's the median volume positions. So what you want to do ideally is that you don't want to be trading, you don't want to be long below the MVP. That's like a bearish bias, but when we go above the MVP, it tends to give it a bullish sort of like technical appreciation. And see how we're above the MVP. So as long as we're pendant that we're above, we are looking for longs. But if we break the MVP, which is at 1947 currently, then you're looking for shorts. Okay, so it's a nice little we can think of it like a moving average, but it tells us the median volume positions. Okay, and it can indicate a quite a good technical like appreciation of the price action, and this is based on retail volumes as well. So pending that price is above, we are quite bullish for gold. Okay, so be careful if you're short, and it's likely we're going to come up to take those stops above, but it's not absolutely guaranteed. But if it's going to come up to punish them, then we know perhaps it could do, couldn't it? We could just have one last pump just to really destroy everyone short this market and get them out of the casino. Like I say, there are probably too many retail traders currently. This move's going to help shift them out of the casino, and it might make things a bit easier and less erratic, because I think the algorithms are using the retail sentiment a little bit. And of course, if the retail guys are going very heavily one way, those algos will kick in, and so it does skew things slightly. So make use of the code, have a look at it. You've got a 7-day trial, and also at the patreon.com we've got a 7-day free trial as well. So that's patreon.com/QuasiDB, and we've got a 7-day trial, so you can have a look at the spreadsheet and the Discord and see what you think. So let's see what happens on Monday. Trade safely, always know your exit, and it's clearly that these guys didn't really know their exits, and you can see the indecision on the order book as they're trying to sell and they're trying to fight that trend higher.